So Jake, this week you met with Mike and Jalisa, and they do something called midterm rentals. Is that correct? Tell me about that.
Yeah, so they're investors here in Nashville, and they found a really good market for themselves by renting to people who are looking for 1 to 6 month long terms.
Okay.
So these are not permanent residents. These are people who are kind of focused on being in Nashville for a shorter term, whether it's like a doctor or a nurse that's in here for a little bit of work, or sometimes there's recording artists that come into town. Nashville's kind of unique like that. There's just a lot of people that come in for kind of shorter terms. So they found a couple rentals that they've invested in, and they furnished them completely, and they really carved out like a nice little niche for themselves, which is cool. And I learned a lot about like how to manage contractors and how they find properties. A lot of cool little tidbits to take away. So you go like the conversation.
Awesome. Let's check it out.
Cool. All right, I'm here with Mike and Jalisa, some real estate investors here in Nashville. Thanks for being here, guys.
No problem.
Thank you.
Yeah, happy to be here.
Yeah, so our goal here is just to have a conversation about real estate, learn about your journey, what's kind of brought you where you guys are, how you got into investing, all that kind of stuff. So why don't you start off by just kind of letting us know what type of investing you guys do in Nashville?
Yeah, so we do rentals. So I'd say I call them midterm rentals. So they're not Airbnbs and they're not year-long leases. We kind of have that sweet spot of the 3 and 6 month lease and month to month.
Okay.
Yep.
Awesome. And how do you kind of find your tenants? Is that through do you source through like a...
Yeah, so currently we're all through Facebook. So there's tons of Facebook groups in Nashville that are, live east, live south, live west, etc. Rent Nashville, all of that. And so we've had incredible success just posting through those. So we haven't had to use any additional services like... I think there's a like traveling nurses one and stuff like that. Yeah. It's been straight up Facebook.
Listed on there, and usually within like a couple of days, we'll just have people lined up ready to show it. And
That's
people,
awesome.
I mean, the need for rentals been crazy. And we also fully furnish them as well. There seems to be a need for that for either people traveling here for work or they're just moving to Nashville. They're like, hey, I need a place for 3, 6, 9 months while I find something more permanent, and it seemed to work well for us. So.
Got you.
Yeah.
And what made you choose kind of focusing on the midterm as opposed to short term or long term?
Yeah, so part of it is, it goes back to our current living situation. So we're in a unique situation where our original plan was to Airbnb, but as Nashville and lots of other cities have realized, it's hard to permit those at the moment, especially if you don't live in them. So going back a little bit in our story, so we moved here in 2014. We were 22 years old, just married and fresh literally from the honeymoon in Smoky Mountains, came over here and looked for a place to live. I had gotten a job here and we didn't know a soul. So we actually lived with my brand new boss for a couple weeks as we looked for an apartment to rent. Finally found an apartment, and it was $600 per month for a 600 square foot apartment.
Okay.
Which, we went to school in Indiana, and Indiana's very cheap, and so we were like, wow, that's expensive. And the next year they came to us and they said, hey, you've got a great window view, blah, 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 blah. Yeah. We're going to raise your rent to $900 a month.
Whoa.
Yeah.
Okay.
And so we were just like, again, 23, 24 at the time, and having not had that experience of living in a more popular growing city, we were just like, what? And Mike, said, hey, that's like a mortgage, man. Like, we could absolutely be paying a mortgage. We should look into buying. And anyways, I was very against it at first. I was just like, I don't want to go I see the prices, $50,000 to $200,000 for homes, and I don't want to go that much into debt and blah, blah, blah. And that's just I just was not familiar with that kind of
those bigger
upbringing.
Numbers and stuff.
And those bigger numbers. Yeah, where I grew up, the homes were so cheap, and my parents' mortgage, I think, was $300 a month. But anyways, I trusted him, and we went for it, and we did our first time home buyer, the FHA loan.
FHA.
Nice.
Put down 3.5%.
Yeah.
And because we knew we'd get a PMI with that, but the PMI with $130,000 house was not that horrible. And we knew we wouldn't be there long term. So anyways, but all I had to say, where we ended up getting, and I think like from the very start, we've never bought a move-in ready house. There's we know that there's just so much equity in buying something that just even needs, from an aesthetic standpoint, a little bit of work.
Sure.
And we're willing to do that work. And so we bought a Great Bones Ranch, brick ranch, fixer-upper. Lived in that for 5 years and sold it for, we bought it for $130 and sold it for $250.
Nice.
Or 4 years later. But all of that to say, that's a really long story to get us to where we were at. When we decided to move, we knew exactly what we wanted, and we wanted, because we had actually visited a friend's house locally, where it was a bungalow, and probably from the 1940s bungalow type of a cottage house, but the upstairs was renovated in an apartment. Nice. And there was exterior stairs, and they rented it out, and it paid their mortgage.
It's almost like a makeshift duplex.
Yeah,
pretty
exactly.
much. Yeah,
that's great.
And because they lived in it, they didn't really have to worry about 2 different addresses, 2 different meters and stuff like that, because they were just going to say, hey, flat rate up top, we'll give you your mail, whatever, easy. And so we knew that when we sold our house, it's exactly what we wanted. Like, we wanted to house hack, you know?
Awesome.
So we were looking for a while for that very specific opportunity, and not a lot of them came up. And when they did come up, they seemed to be pretty overpriced.
Okay.
And there was a day that we were looking, we scoured all of the things every day. And there was a day that one popped up, and our realtor sent it to us, and it said 2-bedroom, 1 bath, but I looked at it, and it had a window up in the attic.
It had dormers.
Dormers.
Right.
Yeah, and I was like, this is the house. It has the same layout as our friends.
Right.
And it probably doesn't have a finished, attic up there. So sure enough, like, we got in that day and opened up this door up to an attic that just basically had this exact ceiling. Like, it was perfect. It was like an apartment waiting to be made already. So they obviously, our friends were lucky to have an apartment already made when they moved in, but we were like, great investment. Like, we get to, not only gain equity in this house, but now, create this opportunity for us. So all that to say, our original plan for that piece, for that attic, was an Airbnb.
Okay.
But we actually live in a neighborhood at the moment where we get trapped by a train 3 to 4 times a day for about an hour.
Wow.
It can, yeah.
It can. Sometimes it's once a day, sometimes it's 4 times a day. And so, lo and behold, there was one very distinct time that I remember my family was visiting from New York, and my grandma wanted to go to a Carrie Underwood concert, and we almost missed the concert because we were stuck on the other side of the train.
Oh, wow.
And I just thought, like, we can't do an Airbnb. Like, we would get crushed.
You can an angry bachelorette party.
Yeah.
That's rough.
Broadway is waiting, and that train will not,
Yeah. So for that, like, for people who are coming for a very specific event, who are typically buying, clientele for Airbnbs, we can't do that, because they're going to be like, hey, I came here for Carrie Underwood and I missed the concert, or I came here for a conference and a big business exec meeting and I missed it because I was waiting for a train for an hour. Yeah. So that eliminated Airbnb for us immediately. And then the other option was, year-long rentals, which was fine, but again, I don't know. I think we just started to get this.
Well, part of what happened was when we moved from our ranch house after we sold that and bought this other property, we went from a 3-bedroom, like 1.5 bath, to 2-bedroom, 1 bath. So we had extra furniture and stuff. So we had extra bed sets, extra dressers. So we said, why don't we furnish it and see if we can, get an increased rent because of that? And that's been the case. So we had the extra, everything we needed for it already. So let's try that.
That's awesome.
Yeah.
So,
And we had lots of people, because it was furnished, because it wasn't our original idea to do 3 or 6 months, but it was just like, hey, here's a furnished apartment, year-long lease. We had so many people reach out and ask, do you do 3-month leases? Do you do 6-month leases? Sure. Because we're only here on contract for this, or because we are, looking to move here, but we don't want to necessarily commit yet. And so because of that, they also they were willing to pay more. We'll pay, blank much more if you let us do.
So you end up making more money for less amount of time. Yeah, that's amazing.
Exactly. So it truly is the happy medium. On the scale of Airbnb, you could make a lot of money. Like, that could be a very lucrative, business for you. all the way down to like 2-year long leases, not furnished. We're like in this cool sweet spot where it's a high demand because there's not a lot of 3-month and month-to-month leases out there.
Right.
So people, it's again high demand, but then also you get to charge more because it is kind of more of a premium opportunity.
Yeah, well, you're solving a specific problem as opposed to just kind of putting a normal house on the market. That's great.
Yeah.
And it's been the perfect setup too because it's like about 650 square feet up there. So all of our renters are usually just like single people moving to Nashville, looking for a temporary spot for 3, 6, maybe 9 months before they find something else.
Sure.
But I mean, when you think about it, when we provide all the furniture, everything, it's fully furnished. They basically bring their clothes, they move in, and when they move out, it's just, I mean, we clean it. We've never had a problem with like, since there's a smaller space, people aren't like throwing parties up there or bringing tons of people, you know, it's literally just like they're crashing there, they're living there. So that's worked out well also from like a rental perspective of like the property has been in good shape. So that's been a good part of it too.
That's awesome.
Good setup.
So what specifically, when you're looking at properties, you know, what are you looking for? Where are you looking for properties? Do you look on the MLS? Do you look through wholesalers? Or how do you guys find deals? Or
We've kind of done it all, I think. Like, for the most part, we've used realtors. And so I have worked in real estate before, in marketing.
Nice.
I'm not a realtor, so like I just know the value that they bring. And so we've used realtors, and then, you know, Mike, you know, does sign up for like random wholesale like emails and alerts and stuff,
Sure.
but honestly we've never found like much of a worthwhile deal for us, because again, we have to find that sweet spot as well from a renovation price standpoint that we're comfortable in investing in, because like that money that we made from the first sale of our house was the first chunk of money we've ever seen that large. Like, and it wasn't crazy, but you know, like we used half of it to pay off our student loans, and the other half we used to invest in this next, you know, opportunity.
Right.
Which now again we've got someone paying our mortgage. And then we did a HELOC on our house to get to the next one. So we're just kind of like churning in that, you know, pattern right now. But all that to say, like, we don't want to spend money that's not ours. So even with the HELOC to get our next property, which we just got back in December, we want minimum renovation costs, but you also, at the same time, want renovations because you want the equity. Yeah. So all that to say, like, and a lot of the wholesale opportunities we've seen require, I think, a lot more attention, and we're the ones doing the majority of the renovations on the weekends outside of our normal jobs and lives. And so it has to be something that, like, we feel comfortable with doing or paying for and stuff like that. So anyways.
Yeah. And a lot of the wholesale deals too, they want to do all cash deals. So because that we haven't had enough cash on hand to do all that, sometime down the road I'd like to look at that more, but I've never worked with like private lenders, so that's something I haven't done a lot of. But back to your question about where do you find properties? So we've gotten everything off the MLS, but I feel like in a lot of real estate investing, people are like, you need to know your criteria, right? Like, okay, what's your criteria for a property? So we knew we were looking in Woodbine or the Wedgwood, Houston area. So, and when you work with
close by it.
And when you work with a realtor, they can set up, you know, certain alerts for those areas. I think that's important. So we knew we wanted like a 2-bedroom, 1 bath, or maybe a 3-bedroom, 1 bath with potential additional space we could turn into another living space. So I think that's important. Just knowing your criteria, what you're looking for, and then the area you're looking for as well. If you can narrow that down, that's super helpful, because either you get the alerts to your inbox or every day, you know, like when we're really gearing up and wanting to buy a property, it's like every day I'm looking at what's in that specific area. And it doesn't take super long because it's 2 specific areas. I know exactly what I'm looking for, the price range. So when something pops on the market, it's like, you know, it's something you can go look at real quick.
That's great.
So I think that's really important. Yeah.
So you guys just stay focused mostly in the Woodbine and Wedgwood area?
Yeah, and, you know, when we originally, like, way back when we're thinking about getting into, you know, real estate investing and doing rentals and stuff, we, you know, dug deep into, I forgot where you got that spreadsheet from, but there's this spreadsheet that he had downloaded that someone had done the work to basically put the return on, you know, investment for tons, like, I think there's like a list of like 150 different cities in the U.S. And like where renting return on investment is like
that's a bigger
best.
Pockets thing,
bigger pockets thing. And so at first we were like, okay, like, well, clearly this is like Steeltown, Ohio has incredible
cash on cash return.
Your cash on cash return is insane. So he's like, I really want to do that. And
properties are cheap.
Properties are super cheap. I just like, and it's just part of, again, like having that kind of conversation of we could do that. And that's a route to get into investments. But for me, like, I don't know, I'm a creative, like my heart and soul is attached to every one of like our little renovations and stuff. And I'm not here to just like buy cheap properties and get people into them. Like I want my mark to be on it. And I want this like sense of like, I don't know, like closeness to our investment.
Yeah, taking pride in it, ownership.
Yeah. And so we took that to a very literal sense, and we have focused on our own neighborhood, and we have a house five houses down from us right now. And our radius is set up like in that same like vicinity, because at the end of the day, like it does make also it's super easier when you don't have necessarily like a management company. We don't need one right now because we don't have enough properties. But even then, it's so great to say like, hey, we live just down the street.
Yeah.
Because it keeps them accountable too. Like,
Absolutely.
hey, we're right down the street. We could, walk our dog past your house, like that kind of stuff. It just makes for, I think, a different kind of feel versus like, oh, I own that property 3 states away and a management company runs it, that kind of a thing. Yeah. So, yeah.
We also do a lot of DIY stuff too for a lot of the basic stuff. So it's like, it's been super convenient with this property. It's like, oh, I got to do some, I put some caulk here or touch up paint this before we move someone in. And so literally I can drive my car for a while, but I could also I'll just pick up my toolbox and walk 5 houses down and it's there, So the convenience aspect is nice too. And just, we're still newer as far as like managing properties and stuff too. So just proximity is nice to the properties.
Yeah, I see that, and I can see how many horror stories will probably pop up if you're trying to. I see a lot of the wholesalers that do like the different, YouTube videos and stuff, and they're like, "I bought a property, I've never seen it. It's in a state I've never been to, and a city I've never heard of." And I'm like, "That sounds horrifying."
Yeah, it's like stressful.
Yeah, but I guess just different brains, different stuff.
Totally.
I see y'all's way. I think that's probably
totally.
In Nashville's, it's a hard market to invest in at the moment because you are going against cash offers, you are going against, and they are pretty high priced homes because of the demand here and the growth. But yeah, I was just telling someone the other day, for us, it's currently at the pace that we're comfortable with in the first place. Like we both have full-time jobs. We do this like on the weekends. And so we're really looking for like, to add 1 to 2 rentals per year max to us, like at the current rate. And so at that pace, like it's fine to invest a little bit more money into a house that's in our neighborhood or close by to us. That still again has room for equity. But yeah, that then we work on and get listed and all of that within like a year's time, and then we go get the other one, et cetera. It's a pace that we're comfortable with currently.
Yeah.
And do you work with any contractors at all, or do you guys do everything yourself? Or
yeah, so we did work originally. So especially for the attic build, that was just literally to the studs, and so we worked with a general contractor at the time to get it up to rough-in. And then we took over from there. So like they basically got the plumbing, the electrical, the studs, and all of that put in. And then from there, from like insulation, drywall, flooring, etc. on, we took over that. And again, like at that point, we definitely, especially in an attic, we learned we are not cut out for drywalling because of all of those different angles
and stuff.
Yep. Yeah. So at that point, we then just subcontract. We just get recommendations from some people that we know or whatever, and do our research. And then we bring someone in, get it quoted out by 3 different people, and have it done. So
you act as your own general contractor.
Kind of, yeah.
Okay.
Yeah.
With the ranch house we bought, so this is going back to our first house. It was just green shag rug carpet, and it needed all new paint and some stuff like that. So, decided we're going to get into real estate. So start reading different books. You listen to the Bigger Pockets podcast. You talk to people. But as far as doing all that stuff, I would say I'm not a very handy person. Like I'm not just like a contractor builder type guy. But I was like, wow, if I want to get
he's not Chip.
I'm not Chip Gaines. But it started with small stuff. So obviously we like doing sweat equity. So when we bought that house, it's like, all right, well, we'll rip up all the carpet.
Sure.
And, pull all the staples up. And we had someone refinish the floors, obviously. But then you start looking for someone to tile the backsplash of the kitchen would be $1,500 or, $2,000 or whatever. I'm like, well, I can buy everything for $200 and YouTube,
you can afford to make a mistake 6 times.
Yeah,
totally.
Yeah, exactly.
Totally.
So I think we're at a point where like our first house, and then we still like doing a good
There's
amount
certain projects
of
we've learned we
DIY
liked.
stuff.
We're fine with that.
But it's kind of like we learned this base of how to DIY a lot. Like I always contract out if there's electrical that's needed, plumbing. That's just like money well spent to me. I'm like, you do that. But even stuff now like paint, to Jalisa's point about us just being really busy, working full time, it's hard to just like this, the single family rental that we bought, the whole interior we wanted to repaint. And it was one of those things where it's like, that's money well spent to find a good subcontractor. They can come in and do it. So we're really at a point now of where like we've learned the knowledge enough to know what it takes to do a project, what should be done. And now we have, we're kind of like building a base of subcontractors that we know do good work, and we can kind of like manage that better because we've done some of it ourselves. That's kind of been our take on it.
And we know the cost, benefit and stuff. And we kind of go through this whole analysis sometimes of like, now that we're on like our fourth house that we've painted, not including other people's houses and rentals that we've, chipped in to help with. Because, we're a part of a couple friend groups, that also are trying to get into it. And so we're like, let's all help each other out. We'll help you tile if you help us do this.
That's
we now know how long something like that takes. And so when we get a quote, we're like, okay, like what is our hourly rate? Or like, what is like, what do we have in our, budget here? And is it truly just worth the, life balance and life gained back to hire that out? And again, in some cases, you're like, for tiling, sometimes it's not. Like tiling's pretty therapeutic and fairly easy for the most part.
Well, it's nice to have the knowledge and to be able to make the choice properly. That way you guys can really weigh it out. And maybe sometimes you want to tile, sometimes you don't.
Exactly.
Take it project by project.
Yep. And so you don't learn until you do it yourself a couple times and then also hire it out a couple times, because now we've got this good gauge of like what something roughly should cost, both in our time or in, cost. So, yeah.
Well, you mentioned some resources and some books. You mentioned Bigger Pockets, great podcast. Are there any other books or resources that you would recommend that have helped you?
I mean, I think for us, there's a lot of other good books out there and stuff, but I think one of the biggest things for me is talking to people who have done it, especially in your area.
Sure. We
have some friends as well who kind of doing the same thing. Actually, the friends that she mentioned who had the house in the Woodbine area with the rental above it, they've now bought another house and are doing the same thing again. Like they have a portion of it they turn into a rental. But just bouncing ideas off of them, what's worked for them, who are contractors they've used. So there's books are good, but then I've experienced with people who've done it as well has been great. Finding that local, especially that sphere of influence in your local area, that's been valuable too.
Yeah.
Awesome. And that spreadsheet you mentioned, is that from Bigger Pockets?
Yeah, that was on Bigger Pockets. That came out, that was a couple of years ago, but they looked at, like she said, probably about 150 markets of towns from, like looking at like overall appreciation. It might have been like over the past 10 years or so, but overall appreciation versus cash on cash return versus, they had all these different calculations. So.
Yeah, it's the different, because this is what I was going to say, the biggest piece of advice that we were given is like, we were talking about it with these, friends of ours of what is our end goal? Like, what is our game? Because it's not a good idea to change that up.
Sure.
So like that one's for appreciation and that one's for cash on cash return and that one's for this. Like it just can start to get really muddy. And so like when people say that you're starting out, like have your like goal in mind. And so even with this last house, a huge back and forth that we ended up having about it was its tear down value in a couple of years will actually be great, and like the rebuild value. The soccer stadium's getting built near it, or just got built near it, and all this other stuff. But we had this like really big tough conversation of like, so he didn't want to invest as much into the updates to it. He just wanted to get someone quickly into it at a really cheap rate and hold it for 2 years and then either sell the lot or tear and rebuild. And we were talking, I was like, that's not our goal. Like our goal as we've discussed as a couple is to hold these for 10 years, and to like really have them appreciate longer in value over time, so that when our kids go to college or when we retire and all of that, you just year by year start to sell off your properties. And so anyways, like to that point, and I think that was on a blog as well, just like a real estate blog, but
Just knowing your exit strategy.
Yeah, know your exit strategy and stick with it.
Yeah.
Yeah, it's an interesting thing because there are so many different exit strategies, and to know them all, I think, is a superpower. To if something does come up and you have to change plans, but to be able to stay focused and not get distracted by the other. Hey, you can make $100,000 right here. It's like maybe you don't want to deviate right now.
Yeah,
it's not always a good idea.
Yeah.
What's one of the biggest hurdles, whether it was a specific project or a specific teardown? What something you guys have really struggled with?
Budgeting.
Budgeting. Okay.
Yeah, I mean, I think there are incredible resources out there to help you, like, before you go into a deal or as you are into a deal, like spreadsheets and stuff that you can get a really good idea of different costs and returns and stuff like that. I would say that Mike and I, at this point, because of our, like, time commitments elsewhere, go off of, like, ballpark. And we've been lucky and we've been very fortunate with those gut feelings and ballpark estimations and stuff like that. But that's been the biggest challenge for us is, again, like, for me especially too, I see these properties, I'm like, oh, but like, we could do this to them and it would be like such a pretty update and this and that, and like he has to rein me in and be like yes, we don't keep a very clear budget to begin with, and so like this is our estimated rate, like if we did that, like think about how much that could potentially like push us over, especially when we aren't being like by the number checking that weekly type of a thing. So so I'd say budgeting's been the biggest challenge, and then this previous rental, just really realizing at the stage of life that we're in, our previous two flips and houses and stuff like that, we did the hard work and we grinded it out and stuff, but this last one was definitely a wake-up call that, like, I think going back to budgeting, we need to be smart and budget for the next one a lot more of external help and subcontractors coming in to help renovate, because we just took way too long on it because of our other life commitments. But thankfully, again, this is why I think the approach that we've taken this helped us out. Thankfully, again, we have that rental above us, and so they've been paying our mortgage. So this whole time we've been holding this property and it's not been rented. We haven't like necessarily been paying two mortgages or losing out on that, but it's definitely like losing out on then the revenue we could be making and profit we could be making off of it not getting rented yet. So all that to say, I think those have been our two biggest challenges, is this most recent one, the time commitment, and then our just skill set in budgeting.
I'd say also too, man, just starting out managing like subcontractors and stuff, that is so hard.
Hard.
It's key to, when you find a good one, I mean, paying them on time, treating them well. I know that sounds very basic, but that goes a long way. Like when you find someone, have a great working relationship with them, and try to get referrals from people, again, who have done a lot. Like if they've done a lot of this kind of stuff, like our local sphere of influence, find out good contacts from them, because that is huge.
We knew nothing, like we knew nothing, and so you trust these people that come in, and we just had a couple really bad experiences in the first, like, more larger renovation that we did in the attic, and just realized how much, like, that the subcontractor and contractor game can, make or break it. A bad
experience were you guys taking advantage of, or?
One of our subcontractors was YouTubing a plumber was YouTubing how to set up our toilet, and so we were like,
on the job?
I was talking with him, he's like, I just moved here from California. So the problem that I found out, you have the master plumber who comes, quotes your project, and then sends his guys to do it, and they just were not, as quality. And I'm texting the guy, I'm like, hey, can you come, like, make sure everything's fine? And that he's busy on other projects. So that's a huge thing of just, that was an eye-opener. He's like, I just moved from California. I was in electrical, and then I got a job in plumbing. So I'm like, all right.
Yeah. But we had met with the, head plumber, whatever you call him, and we felt confident in his skills, but we just didn't realize that they'd then send, like, someone from their team in that sense. So that, and, again, in that same breath, it's having these contracts if you are going to have a larger project like that, and say, like, hey, you, head plumber, are actually the one responsible at the end of the day if something is messed up by one of your people, because contracts in that in these larger projects can be very vague, and it ends up putting a lot of the like risk back to the homeowner. Where it's like, no, like we didn't say we had to check it up or check up on the work and stuff like that. And so it's like, nope, if we're going to do like this big of a project where we're plumbing an entire house and, you know, whatever, wiring an entire house, like we're going to make sure that you're committed as the head person to show up on the job and check and approve the work.
Yeah. So communicating those expectations at the beginning.
And having very clear, very overly detailed, even like contract stuff written out. We ran into some of that with our project as well. But one good, I think, lesson, if there's anyone out there who's thinking about getting into real estate investing or whatever, I mean, we're still newer, we're still starting stuff, but you hear these stories of like, oh man, there was this, problem we ran into and it cost us a couple $1,000 extra, like that's crazy. I told Jalisa this when we first started our apartment renovation. I was like, you know what? We're probably going to run into challenges. We're probably going to spend a little, we're probably going to go over budget a little bit potentially if we run into problems. That's okay, but the life lesson from that is that's an education. So like you never know if you don't start something and you don't learn something. So I think that's one of the biggest things of like, sure, did we go over budget a little bit, and spend some extra money? Yeah, but we learned these life lessons for the rest of our life for the rest of these projects we go for. So I think that's something to, like, people shouldn't get scared, like understand that something like that might happen, but also just know like that's an education and then you'll take it for the rest of your life if this is something you're wanting to get into for a long time. So
just dive in.
Yeah, you just got to do it.
That's great.
Yep.
So if you guys could go back to when you first started investing in real estate, what would you advise yourself? What would you tell yourself?
I think for me, the first step is, like I mentioned earlier, read books, listen to podcasts, talk to people who have done it, and develop your own philosophy that you want to do. Like you said, there's a lot of different ways you can get into real estate investing, but see what works for you. Are you thinking short term, long term? Kind of develop a plan of what you think would work best for you and your lifestyle, and then kind of pursue those avenues, I would say.
That's good. I think, what would you suggest to somebody who's just getting into real estate investing and wants to start talking to contractors and subcontractors? What's some good advice for them?
Yeah. I think as you start working with them, and especially when you find the good ones that communicate with you, they're involved in your project, just treating them well and paying them on time, stuff like that. I know it sounds very basic, but I'm sure there's a lot of like other investors out there that might like hold off payment, they have money in different places, but no, when a job's complete and you look over it and it's good, pay them on time, thank them, let them know they're valued, and just kind of develop a good working relationship with them. Because when you find good subcontractors, you're going to want to use them in the future. So treating them well goes a long way.
Nice.
Yep.
So you guys mentioned that you do, obviously short terms and kind of midterms, but you also mentioned that you're doing long-term strategy. So do you focus on the BRRRR method, or what exactly are you guys?
We're a altered version of the BRRRR method, because we don't end up then, or I guess we're refinancing then repeat. So buy, wait, let me say, buy,
so many R's in the
rent,
whole thing.
renovate.
No, buy, renovate, rent, refinance.
Oh yeah,
repeat.
Nailed it.
You don't do rent first.
Yeah, we've never done that before, because I've actually read that book and stuff, and I think it's a good method, but I think a lot of those properties it can be best if you find a very distressed property, buy it cash, fund the renovations, and then after you do your refinance. So I've just never really felt like we had the capital to do that, but something I look forward to in the future, especially in the Nashville market, because we wanted to stay local. A lot of these properties are a little more expensive versus, I have a good friend in the Chattanooga area. I think he's BRRRR'd like 13 houses or something like that, and it's worked out great for him, but the properties there have been a little cheaper. He's had a business partner that funds the capital, and it's worked well. So because we've stayed local, we haven't done that yet. But
And you said you haven't looked at taking on like a financial partner yet.
Not yet.
Gotcha.
It's something I'm thinking about down the road, because I feel like we're at a point now where we can offer the value of managing the projects, having subcontractors, understanding where we can add value in a property. So finding someone who might not is in the real estate market or have that knowledge but has capital and wants to, I think we're potentially coming up on a point where we would be looking for that.
Yeah, and those guys, once you get into it, they actually give significantly better lending rates once you've done some since you guys have such a good resume already.
Yep.
You'll get probably prime rates. That's great.
Yeah.
Awesome. Well,
Yeah.
Mike, Jalisa, thank you so much for having a conversation with me today.
Yeah.
It's awesome. Appreciate learning from you.
Yeah.
Yeah,
It's awesome.
thanks
Yeah,
for
some
having us.
Thanks for having us. Yeah, definitely.
And everything.
Yeah.
Big thanks to our sponsors, Scout Realty and Mission of Truth. And we'll see you next time on Real 615. Bye.
Woo.